now we're joined by Sam Hocking, BNP Paribas head of global prime brokerage. So trading revenue is down at all these financial firms. What is it about the environment right now?
Well, every summer, you have a lull, and there's this trading just goes way off. And this is one of those unique summers where you go to clients and say, trading's way down. What's going on? What's on your mind? I said, what do you mean? What's on my mind? What's on my mind is the euro, the sovereign debt, the regulatory issues that are in Europe, the taxes that are going up in Europe, the taxes in the U.S., the issues that are revolving around the world. The world is just causing people not to have conviction, and so they don't trade. And so what they do then is they take the leverage down and they go to cash and they sit on the sidelines for a little bit.
Yeah, volume itself, I was looking at some research here. Volume for the S&P 500, the largest U.S. companies, is down 20% than it was from May to June. So volume's down, but volatility is up. Make sense of that for me.
Well, the thing is, there's so much volatility and so much uncertainty, so people don't have the conviction, so they pull back. And so then when they pull back, the trading goes way down, and people wait it out and see if maybe just time would be on their side to go back in.
So now the president's signing financial reform tomorrow. We're getting through earnings season. So is it safe to get back in the water? What is it that your clients, people that you are watching trade, are waiting for here?
Well, there's probably no silver bullet, but one of them is time. Some of it is some of the uncertainty becoming a little more certainty. What a lot of people talk about is what are the rules of the road? And so long as I know what the rules of the road, maybe I can go back into the market. So the other thing that's happening is the performance is not that good. So they're going to have to get back into the market if they want to have some better performance, because they're not going to get any performance by sitting in cash.
Yeah, worst second quarter in a decade is how we introduced it for hedge funds out there, and they're ramping up the amount of cash that they're keeping on the books. What activity are you seeing? Where are you seeing trading?
You're not seeing a lot of activity. You're really not seeing a lot of activity. And we're seeing, 10% increase in cash balances every week. So right now I'm seeing a real pullback, and let's see how it sets up maybe in September. But right now it's a real pullback.
Why September?
Well, I think September, people are back into their life and schools, and people are back knowing that they have one more quarter to go to try to make this go and make good performance and keep their assets.
So when is it that you saw really the pause button being hit? Was it May when we saw the rally just get completely derailed, or was it sort of caution leading up to that? So,
what was happening is kind of in the first quarter, you started seeing flows coming back into hedge funds. You saw performance pretty good. And then once you had kind of May come down, investors started pulling out of the market. People started taking down their leverage. And then June wasn't so much better than May, so leverage came down even more. Cash balances went up. Trading went way down kind of the end of May, June, and going into July.
Now, there are fewer hedge fund players out there, right, that out of the crisis. So we've seen some attrition there, but we've also seen, reports of algorithmic trading on the rise, macro funds having more interest. What is it that you're seeing trend-wise in terms of areas of strength or perhaps growth?
Clearly what's happening is macro is becoming more important. Gold funds, people creating gold funds, tail risk funds, these things that are kind of inflationary hedges are important to the market, and that's where some of the investors are putting their money.
All right. Thanks for giving us a snapshot. We'll see what happens in September.
That's
Thanks,
right. Thanks for having me.